We've had some big moves in the FX market courtesy of the Federal Reserve's surprisingly dovish stance. But what's interesting is that the euro, even though it did rise aggressively when the US dollar fell after FOMC, rejected 115 and has basically pared back or pushed back since then. The reason is because, unlike some of the other countries where we've seen some improvements in data, Euro's really lagging behind because economic data has been consistently weak. This morning we had German retail sales, which fell by the largest amount in 11 years. It was atrocious. And that kind of underscores the overall trend of the economy and explains why the European Central Bank has been so dovish. Today we heard from ECB member Wiedemann, who thinks that 2019 growth is going to be well below their 1.5% forecast. And they also think that inflation is going to be lower as well. So the combination of these factors and the clear trend of weaker data means that we're going to be in a position where the European Central Bank is going to keep policy unchanged, probably for the better part of this year. Draghi, who spoke recently, was, very clearly dovish, and I think that, that is kind of going to make it difficult for the euro to sustain its gains, even though the US dollar is falling. Now, on Friday, the main focus for the markets will be non-farm payrolls in the U.S. Non-farm payrolls were very strong according to last report. So that, I think job growth last month was 300-something thousand. So it will be very difficult for the labor market to come anywhere to meeting that level, even though ADP was better than expected this week. For the most part, I think that there's all signs of a slowdown in the U.S. economy as well. That kind of was one of the main reasons why the Federal Reserve was dovish. So even if we have a softer non-farm payrolls number, that may not end up helping the euro by much because this 115 level really seems to be rock solid resistant. And more importantly, the eurozone itself is kind of struggling. And as we kind of sit and watch the Brexit drama unfold in the UK, the fact that they don't really have any clear path forward and that we still could be at a position where there will be a disorderly Brexit really also poses a risk for the eurozone itself. So looking ahead, I think that we could see a bit more of a pullback in the euro. And if we get a good U.S. non-farm payrolls number, that's going to accelerate the slide. If we get a weak number, the euro may not be the pair to buy because they've got their own troubles. I would look elsewhere for the trade.